Welcome to John's Desk. In this video, I'm going to talk about the Great Rotation. There's a lot of hype around this argument right now, and based on what's happening in the market right now, I think this Great Rotation could be already over. Let's have a look. Let's begin with a comparison of the performances of the S&P 500 and the Russell 2000 between 1987 and today. So this is the S&P, as you can see. I normalized the data at 100, so we are able to compare apples with peers. And this is the Russell 2000. So we see immediately that larger stocks have outperformed the Russell 2000 during the dot-com bubble. So this is the period more or less, 1995 to 2002, until the bubble really popped. Then they went more or less together. Here we see some brief periods of outperformance of the small cap stocks. And then again here, throughout the period, actually from the great financial crisis all the way to 2014, you would have done better by holding small cap stocks. Here, small cap stocks have outperformed. Then there was the drop at the end of 2018. Then more or less the same. And then COVID hits, huge amounts of money leave the market. Then the US starts printing US dollars like there's no tomorrow. And this is what happens. So there was this big spread that we see right now in the market. So let's have a deeper look at that. If you invested $100 in 1987, you would have had at the peak $1,800 US in the S&P 500 and only somewhere between $1,300 and $1,400 with the Russell 2000. If we look at the performances in the past 5 years of the S&P 500 and the Russell 2000, we notice immediately that there is a huge divergence starting in 2021, and they kept on spreading until now. Now we see this little point right here. This is what everybody's calling the Great Rotation. And what this is a reaction to a drop in valuation and earnings of the large tech stocks. You see this little decline here. It's more or less a 5% decline from the top. And basically this rotation is happening because US stock investors are expecting the small caps to outperform the large cap stocks because the Fed is going to cut rates in September. At least that's what the market is expecting, and that's why it's called the Great Rotation. But is that going to happen? Because that was the theory until yesterday, which is, yesterday was the 1st of August, today is the 2nd of August, the markets are plummeting after Japan closed down. So let's have a look at that real quick. While I was looking for today's performances, I found this beautiful tool from Yahoo Finance. This is again the 5-year performance. So you can see here again the spread. If you invested 100 euros in 2019, so let's say 1st of August 2019, you would have had 137 euros with the Russell 2000 and 181 euros with the S&P 500. Let's have a look at this Great Rotation, as everybody called it. Let's check the 1-month chart. If we look at the 1-month chart, we notice immediately that the Russell 2000 is performing way better. With the S&P 500, you would be down 2.7%. With the Russell 2000, you would be up 3.5%. But let's look at the 3 months, and we see that they're basically tied. But look at this. This is the Great Rotation. So this happened between July 9 and July 16th. Apparently, my friends, the Great Rotation is already over, or we are really close to close it. That's because of different news that just came out. So the first one was this one, the Nikkei 225, the biggest index in Japan, which includes the 225 biggest Japanese companies, just closed down by almost 6%, and it was the single worst intraday performance since 1987. And then the second big news is this one. The job growth in the US slowed, and the unemployment rate jumped to 4.3% in July. Markets are going to go down, but at the same time, everybody is looking forward to the Fed cutting rates, and now there is a real big motivation, at least in theory, to cut rates. But again, unemployment at 4.3% historically is still very, very low. But for the past 10 years, we've been used to low unemployment rates, except during COVID, of course. So this little increase is seen as something really, really negative. I'm not sure that I see it the same way, but yeah, the market is always right, guys. So stick with the market as usual. So if you don't believe that this rotation is over, I'm going to show you now a few good ETFs that you can invest in to ride the small cap stocks. So let's have a look. Okay, Russell 2000 ETF you can buy in Europe. So we see here the top 6, I found 6, but let's look at the fund size first. I would stick with the top 5 here, at least 100 million invested. We see that the cheapest is the Invesco one, and they all track, I checked these guys especially, 1, 2, 3, 4, they all track the same index, which is the Russell 2000. You're basically tracking the same thing. And you can see here the performance at 1 year is very close to each other for everyone. They are all accumulating funds. There's no distribution of dividends directly to you, but it's built into the ETFs. I would stick with the big ones, so stick with the top 3. I would stick with something really liquid because you're already investing in small stocks. At least the ETF is liquid. If you want to get out, you can probably always find a buyer with one of these 3 funds: Amundi, Xtrackers, and SPDR. Then, let's see instead, real quick, if this great rotation happened in Europe as well. For European stocks, the history is slightly different. We have 2 indexes, the Stoxx 600, which, as you can see, from 2012 until today is trading just double the amount, which compared to the S&P 500, we know that it's not a lot. And the small cap stocks, surprisingly, have outperformed the large cap stocks. There's no great rotation in Europe. I mean, we see a big decline actually in the small cap stocks already in the years after COVID, their performances. So during COVID, it almost went to the same level, but still, the small cap index by MSCI is performing better, and that has been true for the past 10 years. If you're interested in buying small cap European stocks, I will show you now a couple of interesting ETFs. So there's literally 2. Fund size is quite different between one another. Xtrackers MSCI Europe Small Cap has 1.8 billion in fund under management. Not bad. You can see here the performances. Again, not too bad the past few years. The 3-year one is basically flat. Of course, there was that was after 2022, which was a very poor year. But in 2023, it performed with 12.7% and 12.8%. And these things are tracking the same thing. Keep that in mind. Just different amount of holdings. One is in Luxembourg, one is in Ireland. They're both accumulating ETFs, but the fund size is quite different. So I would stick personally with Xtrackers if I would really like to invest in European small cap stocks. We have just seen the underperformance of the Stoxx 600 index, but what if in the next few months we will see instead finally this gap closing? So let's check real quick the Stoxx 600 best ETFs. Here's the list of the Stoxx 600 ETFs. The biggest and non-sectorial ones are the first 3 from Amundi, iShares, and Xtrackers. Be careful with iShares because it's a distributing ETF. All the others are accumulating and their fund size is massive. So you shouldn't have any problems in case you want to sell out early. I'm closing this video with this real-time chart of the past 5 days of the S&P 500 versus the Russell 2000. As you can see, the Russell 2000 is collapsing as I speak. Be careful out there if you want to invest in small cap stocks because they're usually more volatile than large cap ones. And if you like this video, like, comment, subscribe, and let me know in the comments below if you have any questions. Cheers.